two companies, both building the picks and shovels for the AI gold rush. One just secured a $9.7 billion deal with Microsoft and is already profitable. The other, burning through $100 million every single quarter, but has partnerships with Meta and Microsoft and is projecting up to a $9 billion annual run rate. Here's the kicker. Wall Street has no idea which one is the actual winner. IREN owns the dirt, the power plants, and the land. Nebius owns the software, the ecosystem, and the relationships. One is playing chess. The other is playing poker with someone else's chips. By the end of this video, you're picking a side, and I'm going to show you exactly why one of these could 10x, while the other crashes and burns. Let's go. Let's start with IREN, and let me tell you something most finance channels won't mention, because they don't understand the game theory here. IREN didn't start as an AI play. They were Bitcoin miners. While every other AI infrastructure company is hemorrhaging cash trying to build data centers from scratch, IREN already had the infrastructure. They already owned the land. They already secured the power contracts. They already built the cooling systems. They're playing with house money. December 2024, Microsoft walks in and drops a $9.7 billion partnership on the table. Not a maybe someday deal. A $9.7 billion commitment for AI compute capacity. And IREN's response? Cool, we're targeting $3.4 billion in revenue by the end of 2026. But here's the nuclear part. They're already profitable. While Nebius is losing over $100 million per quarter, IREN is literally printing money from Bitcoin mining while they build out their AI infrastructure. Think about that business model for a second. Your competitor is burning venture capital. You're mining Bitcoin to fund your AI expansion. That's not a moat. That's a castle with a crocodile-filled moat that's also generating passive income. They own the physical layer. The power contracts in Texas where electricity is cheap. The land, the substations, the transformers, everything. This is what I call bare metal dominance. When AI demand spikes, they don't need to negotiate. They don't need to rent. They just flip the switch.
Now, let's talk about Nebius. And this is where it gets spicy. Nebius is the spin-off from Yandex's AI infrastructure division. Russian tech roots, European operational base, global ambitions. And they are going full send on what I call the full stack approach.
They're not just building data centers. They're building custom AI accelerators, software optimization tools, cloud orchestration platforms, the entire vertical integration play. Their pitch? We don't just give you compute, we give you the ecosystem. And guess what? Meta is buying it. Microsoft is buying it. They've got partnerships with the biggest names in tech. Their 2026 projection? A $7 to $9 billion annual run rate. Let me say that again. $9 billion run rate in 2026. But here's the problem nobody wants to talk about. They're losing over $100 million every single quarter. This is classic growth at all costs Silicon Valley playbook. Bezos did it with Amazon. Musk did it with Tesla. The question is, will it work in the AI infrastructure space? Because here's the difference. Amazon was building a new market. Tesla was building a new category. AI infrastructure? That's a commodity play, dressed up in fancy software. Nebius is betting that their software layer makes them sticky, that once Meta or Microsoft integrates their tools, switching costs are too high. IREN is betting that physics wins, that owning the electrons and the land is the only moat that matters. One of them is right. One of them is catastrophically wrong. Okay, stop. We need to talk about something that changes everything. Trump's potential Greenland acquisition and the new energy tariff proposals. I know, sounds crazy, but stay with me, because this is the pattern interrupt that separates the amateurs from the professionals. If Trump moves forward with aggressive energy policies favoring domestic power production, guess who wins? IREN, Texas-based, American power contracts, domestic infrastructure. And Nebius, European operational base, international supply chains, exposure to geopolitical energy price shocks. This isn't about politics. This is about risk vectors. One tariff announcement, one energy policy shift, and suddenly, IREN's bare metal advantage isn't just a business model, it's a fortress. Nebius's software might be beautiful, But if the electricity costs 40% more in Europe than Texas, that margin compression becomes a death spiral. This is the variable nobody's modeling, and it could be the deciding factor. All right, let's get tactical. Because if you're actually going to invest, you need to understand the real differences. Profitable, now. Bitcoin mining cash flow. Physical asset ownership, power, RAND, infrastructure. $9.7 billion Microsoft partnership, locked in. Lower regulatory risk, US-based operations. $3.4 billion revenue target by end of 2026. Vertical integration at the physical layer. IREN's risks. Bitcoin price dependency for current profitability. Less software differentiation, dependent on continued AI compute demand. Texas power grid stability questions. Nebius's advantages. Full stack software differentiation. Meta and Microsoft partnerships. $7 to $9 billion annual run rate potential. European AI regulation positioning. Custom accelerator technology. Ecosystem lock-in potential. Nebius's risks. Burning $100 million plus per quarter. No profitability timeline announced. Geopolitical energy exposure. Higher capital requirements. Execution risk on massive scaling. And hey, if you're getting value from this breakdown, smash that like button. Seriously, the algorithm gods demand sacrifice, and your thumb is the offering. Let's get to 1,000 likes on this one. So who wins? Let me give you the framework. If you believe AI compute is a commodity, physical infrastructure is the moat, profitability matters more than growth, geopolitical stability favors US assets, the boring play wins, then IREN is your pick. They're the defensive champion. The infrastructure play, the I want to sleep at night investment. But if you believe software creates switching costs, ecosystem effects are real, growth at all costs can work in infrastructure, European AI regulation creates advantages, the exciting play wins, then Nebius is your rocket ship. They're the offensive weapon, the growth monster, the I'm here for the 10x or the zero bet. Here's my take, and you can roast me in the comments. I think IREN has a 70% chance of being a solid 2 to 3x over the next 3 years. Boring, profitable, reliable. I think any bias has a 30% chance of being a 10x and a 40% chance of being cut in half. The math? IREN is the higher expected value play for most investors. But if you're young, you've got risk tolerance, and you believe in the full stack thesis, a small position in Nebius could absolutely print. The key word there is small. This is not a bet the farm situation. All right, decision time. Drop a comment right now. Hashtag Team IREN or hashtag Team Nebius. And here's the challenge. Don't just vote, tell me why. Give me your thesis. Tell me what I got wrong. Tell me what I missed. Because here's the truth. I learn more from your comments than you probably learn from my videos. The community here has institutional investors, retail traders, engineers who actually build this stuff. So let's make this the most valuable comment section on YouTube today. Hashtag Team IREN if you're team bare metal and boring profits. Hashtag Team Nebius if you're team full stack and moonshot growth. And if you want the deep dive on my actual position sizing and risk management framework for infrastructure plays like this, that's coming in Friday's video. Subscribe, bell, you know the drill. Now get in those comments.